Hey everyone, what's going on? What's good? Welcome to Market Takes. I know you could have been anywhere in the world, but you are here with me, and I just want to let you know I appreciate you. I am Dion Rabowen, host of Market Takes and reporter at the Wall Street Journal. Listen, there's a lot going on right now in the world. We are trying to break down the state of things, what you need to watch for this upcoming week. We're going to talk about jobs because, of course, it is jobs report week. The credit crunch right now that a lot of folks are worried about in the banking sphere, and the possible recession, things that people are looking out for that are going to tell us how close or how likely a recession is. We're going to get some hard data on that. We're not just going to talk, we're really going to look into the data. So we're going to dive into all of that before we get into this week's non-farm payrolls report, which is, of course, the big kahuna of the report this week. We are also going to talk about first, the state of business. We are going to talk about how this credit crunch could be worrying some folks about the likelihood of recession. And we're going to talk about just some of the data that we're going to get that's going to tell us about banks pulling back on some lending and some other important pieces there. Second, we are going to get some data on the health of the consumer. I've got a big report coming out that I've been telling you guys to watch out for months. Each month that has come in, it has been a little bit more worrisome. We're going to get the latest update on that later this week. And third, of course, jobs. We have four big reports coming out this week on the U.S. labor market that are going to tell us a lot of very important things. So these are the three things that you need to be watching out for this week. We're going to get into all of them, what they are and what they mean right now. So let's first start off with the state of business. Now, so there are some worries that U.S. lending is going to slow because of bank run fears, right? These fears of what happened with Silicon Valley Bank, Signature Bank, Credit Suisse, Deutsche Bank. We've seen it really reverberate around the world. Want to throw something up here on your screen to just kind of illustrate what a lot of people have been worried about. Now, what you're seeing right now is the Fed's Senior Loan Officer Opinion Survey. And this just is basically the percentage of banks that say they are tightening their lending standards. What that means is they are making it harder to give out loans, requiring more from people. Maybe it's higher credit scores, maybe it's more collateral. Basically just saying we're making it a bit tougher because we're worried about lending money out. Now, that number you see there at the edge of your screen, the latest number where we are, that's about 45% of banks saying they are tightening lending standards, making it harder to give out loans. We are already in the area which typically, historically, if you look on your screen there, you see all those little shaded areas that note recession. Every time we get to the level that we are at right now, a level that we were at in January, this isn't even where we are right now, this is before this banking crisis issue, we have had a recession. So that's why this survey is very informative. It tells you about historical trends we have seen going back all the way 30 years. The study started in the 1990s, and as you see, when we get to the levels that we're at right now, there has been a recession every single time. So wanted to just put that on your screen to illustrate the historical trend of this survey and why it's been a fairly accurate predictor of recessions. Now, here's the data that we get this week because that survey, the update to that doesn't come out till May. We are going to get this morning, we already got the US manufacturing PMI. That actually was up from the previous month, still below 50, so still showing a contraction, but moving in the right directions. There have been some worries about US manufacturing. A lot of surveys on manufacturing have been just in the gutter for quite some time. Global manufacturing has showed that it's picked up. We will get another report on the global manufacturing PMI this morning in just about an hour at 11 a.m. Eastern Time. And we also get the reports on services, U.S. services PMI and global services PMI. That's Wednesday and Thursday. PMI surveys, purchasing managers indexes, basically are where these companies go out and they say to businesses, hey, how are you doing? Are you ordering more? Are you ordering less? Are you hiring more? Hiring less? Are things costing more? Costing less? And then they put together a sentiment index. 50, anything above 50 mean things are going well, they're improving. Anything below 50 means they're getting worse. We will get a bunch of those out this week, and in fact, we just got one this morning, came in just below 50 for the US manufacturing sector, showing that things are still getting a little bit worse, but improving from where they were. Also, on Tuesday, we get factory orders, which is exactly what it sounds like, what factories are ordering. Then we get U.S. trade balance, the U.S. trade balance report that comes out on Wednesday. Last month, we saw that orders declined because there were less imports, also less exports, so the U.S. trade balance decreased, but it was just because there was less overall business being conducted, not necessarily what you want. A big thing coming up this week, the IMF's spring meetings, the International Monetary Fund, they're having their financial stability report released Wednesday, and IMF Managing Director Kristalina Georgieva will be having her press conference kicking off the spring meetings. That's on Thursday. If you want to know about the state of global business around the globe, you're going to want to tune into those on Wednesday and Thursday. And finally, on Thursday, we get the Fed's discount window borrowing for the previous week. We have seen the Fed pushing out billions, hundreds of billions of dollars back into these banks to help sturdy them up. We are going to get the latest update on that. The Fed has been trying to reduce its balance sheet, trying to tighten up the economy through its quantitative tightening. Well, they're doing that at the same time as they're pushing a bunch of money back out into the economy. We'll get the latest report on that on Thursday. Now, the second thing, the state of the consumer. We have seen that consumers are loading up on debt. We will get the latest report on consumer credit on Friday. That's going to be big. It's going to give us the February numbers. Now, here's why that matters. We did a report or a video on this a month or two ago called, credit card debt. It's credit card debt is hitting, credit card delinquencies, are skyrocketing. Now what? That video came out about a month ago. We're going to link to it on the page on the VOD so you can watch it there. But we are seeing increased defaults by businesses. We're seeing increased delinquency rates by individuals. Basically, people are taking on a bunch of debt and a bunch of credit that they can't afford, and they're starting to go delinquent. Same thing is happening with businesses. We're not reaching levels that are worrisome yet. It's still a small number of people, but the increase has been very rapid, one of the fastest increase rates in history. We break all that down in the video, so make sure you check that out. Now, the third big theme this week, jobs, J-O-B-S, jobs, jobs, jobs. And it's all about jobs, not just about the state of the economy, but for what's going to go on with inflation. And a big piece of that inflation puzzle has been the JOLTS report. We will get the latest update on that Tuesday. Want to throw something up here on your screen to kind of show you what I'm talking about with jobs. Now, what you're seeing there is the number of job openings in the JOLTS survey and the number of unemployed people. And as you can see, the number of job openings historically had never risen above the number of unemployed people. We are seeing that now, where it's not only are there more job openings than there are unemployed people, there's about 2 to 1. There's about 2 openings for every unemployed person. That hasn't moved yet. You see there at the edge of your screen, that number not really going higher, not really going lower. They're staying about stagnant. Fed Chair Jerome Powell has highlighted this and said, hey, this is a problem for the economy. It's giving workers a little too much leverage, giving them more leverage to negotiate higher raises, higher pay increases when they start a new job, and that's going to keep inflation high. The Fed needs to bring inflation back down. Basically, the problem is consumers have money, and when they have money, they go out and spend. And so even when companies are raising prices, increasing prices over and over, consumers keep paying, and that's what pushes inflation higher. So Fed has been watching this. You should watch it. JOLTS reported on Tuesday. This chart just kind of illustrating the overall theme that we've seen with job openings and unemployed people. That's big. We also get the ADP report for March. That's out on Wednesday. And then we get also on Thursday the Challenger Job Cuts report. I want to throw this up on your screen really quickly to illustrate the theme that we've seen through the Challenger Job Cuts. Now you see low levels of cuts. Those are layoffs. And then boom, you see a pickup there towards the end. We saw in the March report a 410% increase over the year before. In February, we saw a 440% increase over the year before. So big pickups in the Challenger Job Cuts, and that just kind of illustrates the overall theme of layoffs. We are starting to see a pickup in layoffs. And of course, last but certainly not least, we get the non-farm payrolls report from the government, U.S. Labor Department, putting that out on Friday. We will be right here on Market Takes, so be here with us. And you know what? Get your fill. We'll be talking about what the markets are doing, how the markets are responding, and get you caught up on everything that you need to know for that day. So listen, that's going to do it for us here on Market Takes. Like I said, I know you could have been anywhere in the world. You could have been knocking at the door next door with those people, but you were right here with me on Market Takes. And I hope you'll be with us on Friday. We'll see you then on Market Takes.